their head around this week.
Cameron, always appreciate that. Thanks so much. We'll talk to you again soon.
Thanks, Bridie.
Cameron Peacock there from IG Markets. Well, let's get some more analysis too on all of these happenings, and we're joined by George Lucas from Instreet Investment here in the studio. George, great to see you, and a lot to ask you about too, particularly in light of the fact you've just returned from China as well.
Yeah, I've been in China all last week.
Yeah, well,
right.
would want to ask you what you're seeing there. I mean, because obviously we've seen this week manufacturing read there. I mean, is that the sense that you're getting, that there's concerns that this slowdown is happening a little too fast?
Oh, well, obviously I see a very limited amount of people, and it tends to be more in the financial sector, but none of them are really concerned about a slowdown. Everyone's very optimistic, and no one is really talking about slowdown. It's all about continued expectation of significant growth coming from China.
Right.
So it's they're very optimistic, and they're not really worried about what's going on. They do have the same inflictions that we have, which is low market volumes and trying to get investors to come and invest in their market. But from a business point of view, not from a market point of view, they're seeing continuous growth and really no slowdown in growth for them.
Right, okay.
The discussions I was having.
Right, okay. So, I mean, because obviously the concern is that perhaps the engineered slowdown, I mean, it was engineered, wasn't it?
Yeah.
I mean, that it's kind of got a little bit out of control, and there's a leadership changeover happening as well, so it's all kind of happening at the same time.
Yeah, the leadership is obviously a big concern, but even at 49.2 on the PMI, that's still growth around 7.5–8% coming out of China. So, you know, that's why we are going to probably see a little bit of a tick down in the market on the back of it, but we're not going to see a significant tick down. And also this feeling of optimism that you get in China is obviously probably another reason why we don't see the leadership moving as quickly as that we expect for them to introduce monetary stimulus, because they are not looking as negatively on their economy as we are. But it's obviously, you know, maintaining a certain level of growth so that when they do the leadership passover, which happens in about a month's time, is obviously very important for them.
So you still think that we'll see this bottoming then in GDP growth, the slowdown there in the third quarter then? You think that's it? Or?
Even with these PMI numbers where they are now, it's still 7.5–8% growth, as well as people are expecting. Some of the optimistic houses start to reduce their growth rates back. I think ANZ, who was quite optimistic, came out and said their growth rate for China is now 7.8. So it really hasn't changed that much from what people were expecting. You know, people had factored in a slowdown in China, and 49.2 is disappointing, but it really is not a game changer. Obviously, we'll also be quite interested to see what the service sector, because service sector now is a major component of the Chinese economy, which it wasn't, say, 5 years ago.
And do you think then that we will see any major stimulus action then from the Chinese central bank or authorities?
We are. They've already announced there's going to be a major stimulus. We know that all the...
It's more targeted, isn't it?
Yeah, it's all targeted into infrastructure. We know that it's happening, but what we might see them is move it forward, and we might see the People's Bank of China come out and cut interest rates or loosen monetary policy a little bit more. But, you know, the process of monetary stimulus is happening in China. It's just a matter of whether they speed it up or not.
What do you think then for the Australian market open today? I mean, obviously, or how do you sort of, I guess, trade the whole China story then at the moment?
I think it's very hard to trade the China story at the moment. I think there'll probably be a knee-jerk reaction today on the back of on the back of the numbers, and we've seen that a little bit in the Aussie dollar. It's not a significant knee-jerk, so we probably won't get a significant market. And then, you know, the story's going to change. People are going to expect more stimulus coming out of the Chinese authorities, not just fiscal but also monetary authorities, and so then the market may rally on the back of that. But net, you know, you just don't want to really change your position, because this stimulus is going to happen in China, but it's, you know, the discussion will be whether now they bring it even more forward and make it larger, but it's going to happen. So, you know, China is going to pick up again.
There is obviously, though, a big issue, isn't there, with, you know, the worry about inflation and fueling the property price bubble there, isn't it, that's really holding them back?
I don't think inflation is a problem anywhere. I mean, one of the key things that we've seen globally, one of the key trends that we've seen globally is that inflation is always coming in below expectations everywhere. Even in China, it's coming in below expectation. Obviously, the main inflation that they're worried about is food inflation, and we could see that come through, especially because we've seen the drought in the US affecting hog prices, and hog is their main protein, and that's what drove inflation a year and a half ago, with, you know, when pig prices went up 70%. But at the moment, there really is not that much of a fear in China about inflation, and inflation seems to be under control, and there's a lot of room for the People's Bank of China to move on the back that inflation seems to be so under control in China.
Okay, great. Let's just ask you about that other massive story then, of course, and that was this long-awaited speech from Ben Bernanke at Jackson Hole. What did you take away from what he had to say? I mean, what do you think the likelihood of QE3 or some kind of aggressive action?
I think the likelihood of QE3 now is, for me personally, is very high coming out. The market actually hasn't discounted it. The market still, when you read the polls that are coming out, even on Friday when you were reading the polls, the market is still 50-50, if not less, expectation, the September cut. But I think he's made it very clear that it's not a market-driven event, that he's very unhappy with the employment situation in the US and that the US should be doing well. And they've also made it very clear that in the unconventional monetary space, buying more bonds is what they want to do. And also they might move out that indication that the interest rates will stay low rather than 2014 to 2015, which we've got to remember that means the US has had 8 years of nearly zero interest rates. And so we'll be approaching a decade of nearly zero interest rates. So it's they can see this as quite serious for them, and they're going to, they've seen the situation in Japan, and they made it very clear that in Japan, at his speech, that one of the things with Japan is that they always acted on market turmoil and then never followed through. And I think that they're beginning to feel that they need to follow through, even if there's no market turmoil, with more monetary stimulus, rather than just being reactive.
Okay, so the data to watch, what the non-farm payrolls in the manufacturing this week?
I don't think they'll change anything.
Okay.
I can't imagine that they'll be strong enough in the PMIs or all the non-farm payrolls. In fact, they might even disappoint. But even if they come out in line with expectations, they're not going to be strong enough really to change the Fed's opinion, because even with 100,000 job growth, the unemployment rate will probably still tick up.
Got to ask you quickly too about Europe as well. Obviously, Mario Draghi cancelled his speech at Jackson Hole, so we've got to wait till Thursday. Are you getting the sense now that we're not going to see bond buying?
He's made it very clear over and over again that you will not see bond buying from the ECB until they ask the until Spain officially asks the EFSF for to rescue them, and then they'll bond buy first, and then the ECB has come out. But he's reiterated that for many months. But we'll wait and see, if that changes. But they've pretty much said that you've got to go out and ask for political help first, and then we'll come in afterwards.
All right, so don't expect it then,
no,
even though the market seems to be.
Yeah, we need to, but we are expecting him to outline a clearer plan, which we were hoping that he'd do at Jackson Hole, but he obviously cancelled, and so you can be viewed as positive that they were just rushing to put all the final touches. So we are hoping on Thursday that he'll outline a clearer plan of what the ECB is planning to do, to assist the situation.
Okay, and if he doesn't, do you think?
Markets will be very disappointed. Yeah, the markets are going to be very disappointed by the fact that he doesn't come out and go, we're going to buy Spanish bonds without government buying them first.
Right. Okay. Well, we'll talk to you later in the week then and find out what you think of whatever happens. George, always great to see you. Thank you so much, George.